On guys, welcome to another episode of The Curious Cat. Today I'm going to be speaking a little bit about the Canadian economy and specifically what is going on in the credit markets. So the Canadian credit rating was just downgraded from AAA rating down to AA+, and that is bad news for the country as a whole. What is going on is that we have way too much debt, and other countries are starting to question whether or not we'll ever be able to pay it back. So when we combine personal household debt with the government debt, we have the second highest debt to earning ratio in all of the G7 nations, and that is really bad. We are super exposed to the debt, and this is not where you want to be heading into possible recession or actual recession and possible depression. So what happens is when the economy slows down, if everyone's just holding debt and all of a sudden jobs become harder to get, there's going to be all kinds of people that are totally at the mercy of the governments. Your only hope of getting resources to provide your family with food, with shelter, pay your rent, pay your bills, etc., is basically to wait for handouts from the government. And we saw this in the Great Depression, where people had to line up for bread, for milk, whatever. They had to go into the food lines, and that was their only hope. They didn't have enough money to pay the bills and to provide their family with food and shelter. So this is not where you want to be, because if that's the situation you're in, you're at the mercy of what the government decides it will give you for resources. And people seem to think that these handouts, this CERB as they call it, is a good thing. People are starting to say they want to see this rolled out forever. They want it to keep going. They want a universal basic income in Canada. And sure, I bet you're going to see it. And the thing is that it'll look good at first. People are going to think that it just means free money, that they're going to get all this money for free. They don't have to work. Sounds like a great thing, right? But the thing that isn't discussed is that it basically devalues the dollars as a whole, because every time they increase the money supply, if they double the money supply, the buying power of those dollars get cut in half. So now the people that are actually busy working for the dollars they're earning have half the buying power. So they have to work twice as hard for the same amount of resources, which is a bad thing, because it's already really bad. If you look at the inflation rate and the cost of your average good or your assets in Canada, it's 5x in only 15 years. So already homes aren't affordable for your average Canadian, and this is only the start. The amount of money they've printed in the last bit since this COVID crisis is just astronomical. That is eventually going to come into the system in the form of inflation, and prices are going to soar even higher. So this is a bad situation, and what people have been doing to keep up with this high cost of living is they've been taking out money through the form of debt. They're not actually earning it. They're making promissory agreements with the banking cartel to pay it back in the future, which is essentially making a bet that it's going to be easier to pay this money back in the uncertain future. So let me ask you this: how are you so sure it's going to be easier to pay back this money in the future than it is right now? Personally, I think it's only going to get harder to pay the money back. I think that we just went through probably the largest economic boom we're going to see in the next 20 to 30 years. And if you didn't get ahead now, if you weren't able to put money away in this last 10 years, good luck putting it away in the next 10, because right now the economy is really collapsing and jobs are disappearing. And the latest stats coming out of Canada are that 50% of Canadians are $200 away from insolvency. That is ridiculous. Half of Canada. We are so exposed. Everyone is so maxed out on debt. That's the only way the majority of Canadians are continuing to survive in this high price environment, and no one's looking at it honestly. No one's willing to take a hard, honest look at this and go, I can't afford this, maybe I shouldn't buy it. Everyone's just taking out more debt to afford the life they believe they deserve, and no one's willing to make the sacrifices and just say, well, hey, Maybe I can't afford a $2 million home. Maybe I should wait. Maybe I should just put the money in the bank or buy other assets like gold and silver or other currencies like cryptocurrencies and just become more diversified so that you have less exposure to these Canadian dollars as they devalue with all the money printing. And then that way you might actually have some capital or some wealth that you can use to weather this storm that is coming, to provide, to buy food and shelter and pay your bills during an economic crisis. But the problem is Canadians have record low savings rates at the moment. No one has cash. Very few people actually have cash. Everyone is buying everything on credit. And even the Canadian banks, they don't have cash. Everything has gone digital. They're holding record low amounts of depositors' money in physical cash. So we're at high risk of what's called a bank run, where the depositors come and they try and get their cash out so that they could buy assets like gold and silver as the currencies inflate away and depreciate in value. People want to get those dollars and get rid of them. So they want to buy things like food, things like gardening tools. They want to maybe buy they want to buy some gold, they want to buy some silver, they want to get maybe even US dollar. They just want to get out of the Canadian dollar that is losing so much value. And when the banks are only holding 0.5% of depositors' money in cash, the reality is they don't have the cash. So you might have 100 grand in the bank. If you're one of the fortunate few who actually have a bit of cash in the bank, you won't be able to get it. Don't take my word for it. Just go and try and withdraw some money right now without any notice. You'll be hit with a $2,000 limit. It doesn't matter how much money you're holding in the bank. You could have $1 million in there, and they'll limit you right now to $2,000 withdrawal limit a day. So if the Canadian dollar starts collapsing at an exponential rate, you're stuck in the dollar. There's no way to get your money out, to transfer it, to convert it into alternatives. So they've really got everyone backed into a corner. The Canadian currency itself is highly vulnerable to a hyperinflation situation, in my opinion, because we sold all of our gold. We sold the country's gold, which is a good thing to have as kind of a backup. And just in case you have a currency crisis, it's good to have other assets that other countries might consider taking to trade or to buy other goods on a global scale. But when we only have Canadian dollars and our corrupt politicians sold the rest of our gold, we actually have nothing backing our phony money. The only thing that maintains the value of the Canadian dollar is the people's belief in its value. So when we're entering these hyperinflation situations, because the governments are creating so much currency, it's devaluing the dollars, and less people want to hold the dollars, and people start looking for alternatives. Well, that's where people start to question the value or the security of a country's currency. And that, I think, is the scenario we're going to be heading into here in Canada. And it's a scary situation because most Canadians don't even have cash. They're just holding debt. So if all of a sudden the economy crashes and we don't have jobs and everyone has all these debt liabilities to pay back, my question to you is, how do you think that these people are going to pay back the debt? They promised they would pay this money back in the future to the banks. We have tremendous amounts of real estate debt. We have huge amounts of student loan debt, and also huge amounts of credit card debt. And another one is the auto loans. And a lot of the Canadians, they actually had equity in real estate, or real estate appreciated a lot over the last 15 years, mostly because of the devaluation of Canadian dollars, but it did go up to some extent in value. So a lot of Canadians had grown the equity in their homes, but one of the main things, the main trends that happened over the last while was that people pulled that equity out in the form of home equity lines of credit. So what that does is basically any equity that you had grown by paying down your home, by the increase in value of that home, any of that capital or equity that had increased is now the consumer or the end borrower has gone and borrowed that equity to help pay for the high cost of living in Canada. So it seemed like an easy thing. The bankers came in and said, oh, look, you have all this equity sitting in your home because it doubled in value. We can give you a $500,000 loan at pretty low interest, and your average consumer borrower doesn't know any better, and they think, oh, that's a great idea. Things are quite expensive. Why don't I just do that? We can pay for the reno on the house. We can take a trip. We can buy a new boat. We can go on that vacation. So the unsavvy end borrower or average Canadian, basically the bankers duped them and they pushed all this debt, and they kind of made people believe that this economic boom would last forever and there'd be plenty of opportunity to pay this debt back in the future. So now everyone's highly exposed to all this debt, and don't believe what I'm saying. Go and verify this for yourself. Check it all out. All the charts are there that illustrate all of the debt levels, the government debt levels, the consumer debt levels, and all of that. So you can go and verify all this information for yourself, and you can see the situation we're sitting in, and hopefully you can start to understand why I've been so adamant about trying to get this information out there, because basically the people holding all the debt are going to be really vulnerable when an economic crisis hits, because how are you going to afford food? We could enter a hyperinflationary situation and there might be no work and food might be increasing like crazy, and how are you going to afford to feed your family? So if you have a bit of cash at least, and that starts happening, you have options. You could buy gold, you could buy silver, you could look at alternative currencies that are maybe appreciating more than the Canadian dollars. But if you're just stuck into a massive mortgage and all your capital is tied up in debt, if you've agreed to let's say $500,000 worth of debt with the bankers and you don't have any cash in the bank, if the tables turn and the economy gets rough and the jobs dry up, you are on the hook for that money. You have to make these minimum monthly payments to the bankers, and the jobs might not be there to support it. And if you miss one or two payments, guess what? They come and take your house. So you might have been paying this house off for the last 10 or 20 years thinking you're growing your capital and you have this big expensive asset that you've been working so hard, and the banks will just come in and repossess it the second you can't afford it. And when all you have is debt, how are you gonna afford to live? How are you gonna afford to buy food for your family? So the thing with real estate is very illiquid, in the sense of you can't just, if you had gold or silver, you could go sell it tomorrow. You might not get the best price, but you could go sell it in a single day. There's no like you have to put it up for sale. Like a home, you have to put it up for sale. You have no idea if it'll sell. You have to sit it on the market. People are going to come in, they're going to lowball you. And if the economy turns and no one has cash, there's going to be very few buyers for all of this real estate. So I personally think the tables are going to turn dramatically here. And I think a lot of the people that are holding way too much debt are going to get shaken out of the market. They're going to be forced to sell. They're going to go bankrupt. They're basically going to be insolvent, and they're going to be forced to sell their homes. And because most Canadians don't actually have cash, the only buyers that are going to be left, or the majority of the buyers, I should say, are going to be the bankers. So it's a sad situation. This is why I've been trying to advocate people to make money and to get a nest egg in their bank accounts, to build up some wealth, to diversify, to buy some gold, to buy some silver, and maybe even buy some crypto. and just diversify so that if one of these things starts losing a tremendous amount of value, you have exposure to other markets that might hold value a little better. And then you might have some capital to help weather the storm that's coming. But when you're living paycheck to paycheck like your average Canadian, and all you're holding is a bunch of debt, and you've made agreements to pay this large amount of debt off for the next 20-30 years, you're in a pretty vulnerable place, because especially the younger generation, the millennials, we've never seen a true recession or depression. We've only known pretty decent economic times. There's always been jobs available. You've always been able to earn okay money, and there's been a ton of access to the credit market. So people were just living off all this borrowed money, and when they didn't actually work for the money, they had no relationship to how hard the money actually is to earn. So it's easier to spend when you just go and sign a line and agree to $30,000 in student loan debt. It's like, oh, that was pretty easy. That's no big deal. So when you go and buy the new Mac computer, you go and buy all the new camera gear, you go and spend it on a trip, you go to a festival, a music gig, whatever, you don't really have a relation to how hard that money is to actually, if you're actually going to go and work for it. So a lot of these people are disconnected from the true value of a dollar and what it takes to actually earn that. So they've went and borrowed all this money, and they have a disconnect, and they've grown used to this higher standard of living, this phony standard of living, because essentially it's fake. They didn't actually earn that capital. They haven't worked for that standard of living. They've just borrowed the money and agreed to pay it back in the future, and they've been living this higher standard of life. But if things change and it gets harder in the future to pay that back, your standard of living is going to drop dramatically, and you're highly exposed. You could end up one of the few that is stuck waiting for handouts from the government. That might become your only option. And that's why I speak a lot about this on my channel. I just don't want fellow Canadians and fellow Americans to be exposed to this kind of risk. That's why I talk a lot about growing your capital and growing a nest egg, and just learning about finance, learning about this game, this scam that these central banking cartel play over and over on the working and middle class, and how they're constantly robbing us of our wealth and of our time, and essentially keeping us enslaved. So yeah, with all that being said, I just think it's time to start paying attention. It's kind of a big deal that Canada just lost its credit rating. It's a horrible thing. I mean, it's just showing that we're in big trouble. We're holding way too much debt. The government's exposed to too much debt. The people are exposed to too much debt. And now we don't have the jobs to pay it back. Our growth rate's at 0.3%. We essentially have no growth in the economy, and the jobs are drying up left, right, and center. Everyone's dependent on the CERB handout, and a lot of the mortgages are already in deferral. And we're not even a few months into this. We haven't even seen what will happen after a year, maybe 2 years. And I'm even questioning the narrative of the whole COVID and how much this is actually, how much danger we're actually in, and the effectiveness of shutting down the economy. I don't buy that narrative personally. I think we're overreacting. I think the economic fallout is going to have a much more severe consequence than COVID itself. And I think this is all by design, by the elite banking cartel that have all the money. They're intentionally crashing markets so that they can come back in with all this phony money that they just create out of thin air and buy everything up. They're going to own your house. They're going to own your business. They're going to, if you just spent $100K on, opening up a new business, let's say you're a tradesman and you bought a bunch of service vehicles and new tools, guess what? you're going to be forced to sell that if you're not able to meet the minimum debt obligations if you borrowed that money. And so you're going to go to sell it and no one has cash, so you have to keep dropping the price of these goods until you find a buyer. And the price gets dropped and dropped and dropped, and finally, guess who comes in? Banking cartel. And they go, oh, you know, you bought that for 100K, we'll give you 10 grand for all your stuff. And you don't really have a choice. It's that or complete insolvency, bankruptcy. So this is the fragility that debt money creates, and overextending yourself and making promissory agreements with the banking cartel to pay stuff back in the future. This is the kind of fragility that these actions cause. This is why Austrian economists and Austrian economic theory really promotes saving and growing capital and essentially having a currency or a money that actually holds its value, so that when you save it, it maintains value, unlike the Canadian dollars that have lost somewhere between 65 and 75% of their buying power in only 15 years. So let's say you had 100 grand, you made 100 grand and you put that in the bank 15 years ago, that now has the buying power of about $35,000 at best, more likely about $25,000. So you can see how quickly these Canadian dollars are devaluing, and we're all busy working for them and giving away our most valuable asset for this phony money. And our most valuable asset is our time, our health, the time and our personal health. So we're giving this away to earn this money, but the money isn't maintaining its value. So I suggest you learn a little bit about Austrian economics if you haven't already. Learn a little bit about government currencies, about fiat currency, about inflation, and figure out for yourself how this whole system works and how it's designed to keep us poor and to keep robbing our wealth, taking the wealth from the middle class. They do it by us working so hard, and they have us believing that all homes are an asset. So all these people make these huge agreements to buy these homes that they think can only go up in value. Now they're on the hook for all this money. Then the cartel comes in and they crash the economy, and everyone goes to sell because they need money to survive, and there's no buyers. So people start cutting their prices, and things will go down. That's called a deflationary situation. And I personally think we're going to enter a short deflationary period. Could be prolonged, it's hard to say, but I do believe that we're going to enter some form of deflation before we enter true hyperinflation. So if you do have money, or if you are able to create capital in the next bit, it's a great time to do so, because there's going to be major buying opportunities as these people that took out way too much debt are forced to start liquidating some of their toys, some of the stuff they believed were assets. They're gonna have to start liquidating some of this stuff in order to pay for the cost of living, in order to pay to service some of their debt as the jobs dry up and they no longer have the high paying jobs that they thought they would have forever to sustain these high levels of debt. So this is how this all works. I don't know, I might call this episode Rail and Rant. Just walking on the tracks here, ranting. That's what I like to do best. I know this video ran on a little bit long, but I had a lot to say. So yeah, I hope you enjoyed the video. Again, if you haven't already, please subscribe to the channel, like the video, share it with friends and family. And I appreciate your guys' time. I appreciate every one of you following my channel. It means a lot to me. I hope you guys are all doing well out there. Prosper, and God bless.